again, this is Alex with MasterChartsTrading.com, and this is market recap for January 17, 2020. As always, please hit the like button and subscribe to this channel, as well as share this video with others. Uh, Again, stocks are at records, but now on the good news that the new NAFTA agreement was signed. Last week's bad news appear not to matter anymore, but this is just the nature of the stock market. Lots of sectors are hitting new highs. The stock market is, this rally is broad. I'll look at a few, but here are some utilities, industrials, consumer staples, and communication sectors. And Canada and Mexico also broke the 52-week highs as the new NAFTA USMCA is passed. I'm actually holding a position in Mexico. Not much has changed for oil. It's trying to bottom. Uh, I would avoid trying to find a bottom in a downtrading security, and I'll give an example of natural gas. Precious metals may not be done correcting yet, and dollar could be against it now for another reversal, but now to the upside. And we'll look finally at Bitcoin chart that could be showing resistance very soon. All right, so S&P 500. First of all, I want to introduce my service. My service is located at MasterChartsTrading.com. Uh, these indicators that you see on the chart, these overlays, the green, the blue, the red, and the yellow lines, are one of the unique products here at MasterCharts Trading. They're called trading indicators. You can have them on your chart for TradingView. You don't need a paid account on TradingView to get my indicators. If you are interested more in the newsletter type of thing, you can get alerts, and we trade lots of securities. Also, you can get alerts and trading indicators together. I think it's the best deal. So this overall stock market is obviously bullish at new records. These are futures, but we can look at individual ETFs. Here's S&P 500 ETF SPY. Again at records. Latest opportunity was actually almost a year ago in February, and this is an actual alert right there on 4th of February. It was a beautiful move. Two new records. Let me see. This was 21% move. Just incredible. QQQ, the Nasdaq 100, still moving higher despite pretty much everything. I mean, this is getting a little bit uh, out of hand almost. But then again, look at this move here from the December 2018 to 1st of May. So also a significant move, 33% move. So we still have a ways to go. Perhaps this is a measured move. You know, we gotta move up here from the lows in December of 2018. Kind of traded sideways and broke out again. So we could still see another significant move higher. But overall, you know, possibly getting a little bit overbought. I kept saying that it's been overbought since like December 3rd. In fact, that's for the reason why I don't really use indicators anymore. Like you can put stochastic uh, indicator and you know, down here, I'm gonna make it bigger, but you can clearly see it's overbought. You know, um, I'm gonna zoom in right there. You can see that it's been above 70 since it broke out. So do we use? I don't really use the stochastics. It's just not really useful for me. All right, so again, these indicators are calling the price action quite well. We're on the correct side of the trade. Here's Dow Jones, 28th of May of last year, alert for another over 16% move actually. Uh, you know, can't really complain. IWM, the small caps are also breaking to 52-week highs. Uh, latest alert was good for over 9% move, but depending on where you're holding from, it could be more. Uh, I started thinking that IWM, the small caps, are bullish here in February 2019. So yeah, IWM, the small caps are underperforming slightly, but that doesn't mean that the stock market is in danger. In fact, overall, uh, the stock market has been just incredibly resilient, and I'll show in a few seconds the various sectors that also are hitting new records. But before that, let me look at junk bonds. Here are the junk bonds, again at 52-week highs, confirming the move higher. Junk bonds and stocks have high degree of correlation. In other words, they move together in lockstep. So if stocks and bonds are moving together, stock and junk bonds are moving together, generally speaking, it's good news. Some of the sectors break into new records. Here's utilities. And yeah, they are defensive in nature, but that doesn't mean that they're not stocks. In fact, you can see the gain on utilities from the breakout back in January of 2019 was 24%. So yeah, they move quite a bit as well. So this new breakout to new record highs for utilities, what does it mean? It's a defensive sector, sure, but quite often I've been noticing that utilities actually break out first and then the rest of the market follows. It most likely has to do with the interest rates, and I'm seeing that interest rates may actually get lower once again. XLY discretionary also moving nicely higher, about 15% from previous alert from May of 2019. This is as economically sensitive as it gets. Consumer discretionary is very economically sensitive. XLV healthcare also at records, 15+% gain from the recent alert. Latest alert was September 11th of last year. XLP consumer staples, same thing. Uh, at records, last good opportunity was almost a year ago. This is also a defensive sector, but once again, this is in a sense, almost irrelevant because usually stocks move together in lockstep, and if sometime in the future stock market rolls over, I guarantee you everything will get sold, including utilities and staples. XLK, just amazing move, 32+% move from the previous alert. Previous alert was in in June of last year. So technology is clearly leading the market. And this is again a good thing to have because because the technology is a offensive sector. So this means that investors are thinking that the future is still going to be bright, and they're investing in uh, relatively high risk sectors such as technology. Industrial, same thing, also attractors. I'm just showing that this rally is very broad and stocks are moving higher pretty much across the board. 16% gain. Financials, 52-week highs again. These up arrows are actual alerts to my subscribers at MasterCharts Trading. Sign up, get your indicators, and start trading, making money. There's no need to sit in the sidelines. Here's XLC, communication services sector. We didn't trade this one, but also at records. Getting a little bit overbought, I think. I mean, this is a parabolic move, but sometimes those parabolic moves just continue. Let's get back to the North America again. Here's EWC Canadian shares. Uh, Canada also broke out a while back in February of last year, where I'm hovering right there. And these are actual alerts, good for over 13% gain. So Canada and Mexico. Here's Mexico also breaking to 52-week highs. I actually have a position in Mexico right there. I opened the 17th of October, and it's nice. It's already up over 7%. I'm probably gonna hold it a while longer. I feel like it's gonna continue significantly higher. So yeah, we got a new deal signed, but you can see the move began well before the signing of this a new deal with Canada and Mexico. You can see the move began almost a year ago for Canada, and for Mexico, the move began in October of last year. So, uh, in other words, if we just look at the chart, we can already predict the price movement. We don't really need to worry about world events, etc. We can just look at the chart. If the chart is saying that we should be buying, and it was saying right there in October of last year that we should be buying from Mexico, I went ahead and I bought it. I wasn't really worried about any kind of fundamental analysis, such as will the deal be signed or when the deal will be signed. Right, let's switch gears. Let's look at oil. Latest trade for oil, I went ahead and I bought on November 7th here. Actually, uh, I already showed this trade, but I closed at a profit, so I don't have any positions right now. But this candle from the 8th of January, I mean, just huge bearish candle. Um, the same similar looking candles are actually on charts of many precious metals such as gold and silver. Uh, so still oil is kind of reeling from this selling, and actually if it drops below 56.55, this red line, then I think we can start shorting it again. Natural gas. Um, I had some subscribers asking me about natural gas, and some of them are actually holding long positions in natural gas. In other words, they think that it's gonna continue higher, and I'm like, I don't, there's no bottom in sight. These are new lows. So yeah, let's just wait with natural gas. This is clearly a bearish security. If or when, I mean, right now we're seeing the narrowing of a trading range. So trading range, you can see between the yellow and green line right there. It's 0.812. Uh, Before, just a few months ago, it was almost $2 difference. So you can see that the trading range has narrowed, but the trend still continues to be down. So no end in sight for the downtrend for natural gas. Okay, and here's gold, and there's the shooting star candlestick on the 8th of January of this year. And still, I don't know if it's worked off this overbought condition, so I would just like do nothing with gold right now and wait. Same goes for silver. There's that candle on the 8th of January. I will try and do nothing with silver right this instant. Most likely the reason for that is the dollar. Here you can see a breakdown on 12th of December, a confirmed breakdown right there on 30th of December. I thought that we're definitely going to continue lower, but notice that today's price action actually getting very close to bullish levels again. Bullish levels are currently at 98.13. So if if a dollar gets there, it could continue higher, and that would weigh on gold. Here's euro versus US dollar. You can notice the downward facing arrows. This is purple in color. It means I didn't actually send any alerts, but if I was trading it, I would be shorting the security. So Even the latest one right there on the 17th of January. Interesting. And also USD JPY is breaking in favor of Japan of the US dollar. So go figure with that. Um, yeah. BTC USD, Bitcoin is approaching resistance. I think resistance is currently at 92.19, very close. So I would expect some sort of a tap in action here, maybe something along the lines of similar to December 4th right there. Uh, yeah, and then we can see most likely a move down. Alternative scenario is also possible. I mean, look at sometimes it moves crazy big. So yeah, we could also move higher, but right this instant, I still see resistance around the red line, which is currently at 92.19. Okay, that's it for today's recap. Please head over to MasterChartsTrading.com and sign up for one of the plans. As I mentioned, we have three different plans. One is alerts, which is basically a newsletter type of service. You get alerts about various securities that we trade, and you can see that we have to trade lots of securities, so you definitely will not get bored. If you are ready to trade on your own, get your own trading indicators for TradingView. It's only $29.95 per month. I think it's a steal, and you can also trade on your own. That's the most important thing. You don't need my guidance. If you, I still think that the best deal is alerts and indicators, and in that case, if you get them, then you will not only get your own indicators, but you'll also get lots of examples to go along with it. All right, that's it for today's recap. As I mentioned before, please click the like button and share this video with others, and also subscribe to this channel on YouTube. Thanks for watching. Have another great trading week. Bye bye.